What you can see here is that the size of the market last year was 353 million euros, more or less $400 billion. And so if we have a closer focus on the industry today and what it has been through since 2010, what you see is that basically the trend is always upwards when it comes to the size of the market. Since 1996, and this until 2019, basically, the average growth, annual growth, has been 6%. And very recently, the growth rate has been more, actually a two-digit growth and more than 20%. Thank you very much to the audience for being here today. So you might wonder, it's been all about techno, Big Bang, it's been all about disruptions, AI. So what is luxury doing here? Actually, the luxury industry has been through a lot of disruptions the last 15 years. And still, we have giants. So that's the reason why we're here today. We're going to talk about how is it like to thrive as an industry that has gone through a lot of major changes. So Alexandra and myself, Alexandra is going to introduce herself. Alexandra is the general manager of La Prairie back in the UK. And so she's the business credentials here of this presentation. We're going to try and crack the code of the luxury resilience. So since basically, let's say 1980, the luxury industry has been a wealth generator. So what you can see here, and we're going to focus specifically on the personal luxury goods, so basically on what you are wearing, the wardrobe and the lifestyle products. What you can see here is that the size of the market last year was 353 million euros, more or less $400 billion. So it's huge, basically. And this is true despite all the crises the luxury industry has been through. And so if we have a closer focus on the industry today and what it has been through since 2010, what you see is that basically the trend is always upwards when it comes to the size of the market. Since 1996, and this until 2019, basically, the average growth, annual growth, has been 6%. And very recently, and even with COVID, where there's a little V-shape, the growth rate has been more, actually a two-digit growth and more than 20%. And last year specifically, just for 1 year, we had a growth of 15%. So today we're speaking of a luxury renaissance. This slide comes from Bain & Company. They have like a thorough study every year of the industry. We're speaking of a luxury renaissance. What's interesting to see is to see the categories that are involved as well. Since the beginning, accessories and specifically handbags have been driving the growth. And today, what we see is that apparel is also part of the growth of the industry. And the fastest growing category is hard luxury. Hard luxury is basically what you can buy as an estate, as an investment value. So typically, timepieces, bags such as the 255 by Chanel or the Hermes and the Birkin, and high jewelry. So basically, you have the categories that are the fastest and warmest growth. Also, if you look at the stock price indexes, so analysts and stakeholders are very happy because they are mind-blowing. So we need to look at the trends, of course, but most of them are high and upwards. So if you look at this graph, so the black one is Richemont. Richemont is probably smaller than the other groups because they focus on jewelry and watches. Then you have the light blue one that's Kering. So Kering has been upwards, but because of COVID, since Kering is mostly fashion, the group will have to probably reshuffle the activities. But if you look at the companies that lead the industry, typically LVMH, Hermes, and Chanel that you don't see here because they are not public, they are not listed, but they have the same upward trend. What you see is that it's going up upper, faster, and that the stock price index is super high on the market. Okay, so today, basically, LVMH, one share of LVMH stake revolves around 800, 900 euros, sometimes 1,000 euros. Attractiveness, and I'd say the luxury magic revolves around, PMFF, what I call PMFF. People like to know about the power of the groups, the money that the groups are making, the family business, and the fame. But that's not enough. This is for tabloids. But if we're speaking business, what is the secret sauce? What is the secret recipe behind this fascinating magic? And so, if we look at the luxury powerhouses today and what they have in common, there are always those three pillars. First, and that's actually something that's unavoidable in luxury, unbridled creativity. You must be the star of creativity. That's the reason why luxury groups fight over designers such as Slimane, Phoebe Philo, and the like, because creativity is what drives the fascination and the magic in luxury. The second thing is outstanding craft, or R&D, because Alexandra is going to talk about innovation. Something that's outstanding and that's top of the class, the elite class of what you can find on the market. Here you have an example of a Van Cleef necklace. The technique used here is called the mystery setting. The mystery setting is basically setting the stones on gold racks and you won't see the gold. It takes 20 to 30 years for a craftsman to master this technique. So imagine we have 3 or 4 of them around the world. They're very precious, right? Okay, so outstanding craft and financial power. Financial power induces financial power, so it's a chicken and egg situation. But here money is really a big thing in the luxury industry. Also, and this is where the magic is not so magic, it becomes business drive and it becomes strategy and corporate strategy. The strategies in luxury are very strong. And they start with corporate and go down to the product. So corporate strategies. All the top powerhouses today have started with huge strategic transformation. LVMH, that's the leader, has gone full throttle M&A for the last 20 years. So I put you here the waves of purchase and releases of companies. The point at LVMH was that you start with Louis Vuitton, Moet & Cie, and you grow across categories to master jewelry, timepieces, fragrances, cosmetics, fashion, hospitality, blah, blah, blah. And this is how you're going to build a huge powerhouse that covers basically all product categories possible. So today, if you ask analysts what LVMH is about, it's a luxury lifestyle group. It's not just about products, it's about experiences, and it's about travels, and it's about experience, it's about hospitality. It's not only about the wardrobe today. And that's a very interesting strategy because it's a global, multi-brand, multi-market, multi-product categories business, which means that when things are not doing well in China because the government said you're not offering cognac anymore to your clients, it's okay because America is taking the lead on cognac so far because there's a new trend on cocktails. So it's a very stable business model and that's very immune to all market changes. Strategic transformation. Another way to transform is to become an expert. Kering went through that. Kering, they started doing timber, wood, furniture. The very interesting story about Kering is that they had wood, furniture, and they had retail stores to sell the furniture. So they became experts in CRM, customer relationship management. They became experts in building brands, and they became experts in building products and distribution networks. And so when François-Henri Pinault, the son of François Pinault, was of age of running the company, he was 40 years old, he had 2 options, and that's what he told Harvard. I had 2 options, move on with what my father had done, or strategically transform the group to move to another trend, and this is what he has done. So he has basically resold everything that was in blue, distribution, B2B, wood, timber, furniture, etc., generated cash and invested into the group, that's actually the group LVMH and himself fought over, that was the Gucci group. So this is how he got Saint Laurent, Balenciaga, Bottega Veneta, and the like. And today, what's really interesting in the strategy here, in the corporate strategy, is that we have a group focused on fashion specifically. There's a little bit of jewelry, a little bit of watchmaking, but they are mostly fashion with top-notch brands. And they assign a role to the brands. So the flagship brands are basically the first one that were acquired by the group. And here the flagship is Gucci. The strong pillar brands are Bottega Veneta, Saint Laurent, and Balenciaga. And then there's the little ones that we take care of. So the group is taking care of the whole logistics, finance, talents, etc. And they let the creativity to the small houses. So Stella McCartney left the portfolio, but we'll still have Alexander McQueen and we'll still have Brioni that are little gems that are to be the next to be powerhouses. And that's very interesting because here you focus your investments on the flagship brand that actually paves the way and does all the trial and error I was speaking about. And then once the big brand, Gucci, has tried everything on the market, they share experiences with the pillar brands, right? And this is very virtuous because there's a sharing of experience between all the brands within the portfolio. Richemont, they started with tobacco. They split tobacco with the luxury activities they had. I'm not sure you know the story, but the way Richemont entered the luxury industry was through tobacco, through Cartier, because they wanted to design ashtrays and lighters with the Cartier logo. So this is how they started and speak with Cartier, and they discovered that Cartier was actually very interesting in terms of business. So this is how they put, like the full throttle on the luxury industry. And testing Cartier, they had this vision of, we want to be a full luxury group, super timeless luxury group, so we're gonna go jewelry, and we're gonna go timepieces. And chances are that this group is going to increase the stock price index and to go upwards more and more because they are real estate jewelry, they are investment pieces, and today this is what drives the growth. So the basis is visionary corporate strategy, and then brand. How do you manage the brand? What's very specific to luxury houses that succeed on the market is that they know how to leverage the scarcity effect. Hermès invented it. Basically, and you probably all know that, guys, you have to wait in the line to enter the store, sometimes 100 meters line and 2 hours, queuing to get a bag. The bag costs $20,000, but still they have you wait outside the store. Or you can wait for 2 or 3 years to get a bag that costs you a fortune. It's called the scarcity effect. You want what you can't have, and that's human. Across humanity, if you have one bottle of champagne, everybody's going to fight for it. If you have lots of, you're not going to fight for it. So the scarcity effect is very strong. And see, it's culturally valid across cultures. There it's in China, and there it's in Qatar. So that's a picture I've taken myself because I found it really interesting that women that are so wealthy can actually stand in the line for 1 hour to get into a store. That's crazy. Also, what the luxury industry does very well and has invented in terms of brand management, it's mastering a brand grammar and iconic products and icons. So what is a brand grammar? It's basically codes that you see and that you can recognize. So here you see it, you close your eyes, it's Chanel. Black, white, always the same codes, so you recognize it's Chanel. So that's a grammar, and it's a very strong one. And being capable of building icons. Icons are products that are stable and timeless in time, and when you manage to make them iconic, you can increase the prices and nobody will care. They actually will be happy to buy more. Okay, finally, products. Outstanding creativity and craft is at the core of luxury, and only luxury can do that. And I'm going to speed up a little because I want to leave room to my friend. The ability to build myths and archetypes. Luxury knows how to do that. What is an archetype? It is, okay, I'm the Dior woman, I'm the J'adore woman, so I'm a goddess. It's the ability to generate stories where people can actually identify. Or it's Patek Philippe, I'm not buying a watch that's super expensive. I'm buying myself the fact that I'm a good father. So you'll move a step beyond than just buying a status product. You're actually telling yourself a story of some values that you abide by. And finally, and that's, I will finish with that, what is really interesting about luxury and that makes it fascinating and so thriving, it's the fact that it's a no marketing business. What does this mean? You don't want to sell. Everything you do doesn't show any promotional intent or selling intent. You have to be very subtle. You have to be attractive and people come to you, but at the same time, you don't show. So you're not going to do digital advertising that's too, too attractive. You're not going to do social media that's too loud and intense. You're not going to push people to buy the products. You need to actually be attractive enough so that people stand in the line and feel that they want to be part of your brand without selling too much. So it's about generating desirability. How do you leverage greater desirability day after day when you're a luxury brand? And so this leads us to a very strong power. That is, it's one of the only industries where when you manage to create a strong brand, you have a strong strategy, and you have strong products that are iconic, you can double, triple, multiply by 4 the price of an iconic bag, here the classic flap, and people are still gonna buy. And what you see here is that the last 15 years, the 255 has basically multiplied the price by 5, and people still buy. Voila, so wrapping it up very fast, the luxury magic recipe is about no marketing. It's desirability driven, it's product and brand centric, but at the same time, it takes into account the customers, it takes into account the lifestyle, it takes into account people's experiences, and it's backed, because here is no magic at the end, it's mere business and good business. It's backed by strategic corporate transformation, it's backed by brand roles that are assigned in structured portfolio with a P&L intent without saying, or saying to the analyst, with hero product strategies and icons.